All right, good afternoon, fellow traders. David Whiteley here with ULTradez, coming to you on this Monday afternoon, July the 31st, with my trade recap for today. So if you're new to the channel, I am in the process of working to get 20 funded accounts through Apex. It's been quite a process. I currently only have 15 evaluation accounts that I'm working with, and I did a video yesterday that just explains where I'm at and why I'm there. So I won't go into that in detail now. So for my trade recap today, I try to be as transparent as possible. I'll show you my P&L and the specific trades that I took and why I took them. I am not an expert. I am learning. My strategy is based on the teachings of the great Bob Anderson. So if you haven't checked out his channel, you certainly should. It's the trading journey of Robert Anderson. Excellent teacher and a great strategy. So I have adapted that strategy, and really my intent here is just to share my journey and my experience with you as I get to the point where I have 20 funded accounts. So today was a green day, barely. Really what happened was the market was just sideways all day. I'll show that. And I did take one trade simply because I needed a trading day on those accounts. And I got actually slippage in my entry. I got a better entry on all but my leader account, which was kind of funny. So my leader account didn't get as much as every other account, but they got one extra tick. So 2 ticks in the ES was what I got. So let's start with the good old oil here. And let's zoom over here. I got to get this thing out of the way. Oh, here, let me show you. Sorry, let me show you my P&L first. So this is where we ended the day. You can see they're all $50,000 accounts except for one $25,000 account, which is my leader account. Again, I explain why this is day 2, I think, trading that account. And I got this account specifically to be the leader account. And again, I explained why in my previous video, so feel free to watch that if you want to know my thought process, right or wrong or otherwise. That's the way I'm doing it. My P&L today, so up 21 bucks in every account, $8.50 in my leader account. It's a green day. We got our trade in for the day, so it counts. That's really all it does. So today I watched these silly charts all day long. If I didn't have to trade, I would not have. I would have given up after the first, by probably 9 or 10 o'clock my time, Central Time, just because the market, it went sideways. We've got, we're coming into the open. It's just sideways. The 21 SMA, the 5-minute 21 SMA is just flat. And whenever this guy is flat, I don't like trading it. This strategy is one where you're looking for a reaction off of this line. And if it's flat, you're not going to get a reaction. You might, but it's kind of a coin flip. And actually, as I was looking at this, I kind of realized when it's flat, it's almost, it becomes the average. It's the average price right there in the middle. That's what it is. But when it's going flat, it just price revolves around it. So you could have almost just taken every trade kind of out here. Every time it pushed up to kind of a new high or a new low, just take it the other way till it gets back to that middle, because that's what it did all day long. It just bounced and bounced and bounced. I didn't see any trades in here that I was comfortable taking. Even the ones. So here's an example. So let's look at this one. So price comes down, it crosses through the moving averages, and it comes down to the bottom of the opening range. And what normally happens when it goes from one end to the other, a lot of times, if it doesn't break through, it's going to pull back up, which is what it does. It doesn't quite get to the other end, but we have this low, this pivot low. It pulls up to a pivot high, and then comes down to our gold line, our 5-minute 9 EMA. But in my mind, this is too choppy to take because And I did the same thing over here where I draw these lines to help me kind of visualize this. So we have price moves up to this high. Then price moves down to this low. Then it moves up to a lower high. And then it breaks this pivot here before it comes down into our moving average. And so that invalidates the trade for me. This line is a resistance line that I have drawn on the hourly time frame, just really for reference. But it does work out to an extent. I mean, you could have taken the break of the candle that pierced the EMA. Your entry would have been at 49 at 81.49, and it does get back up to this pivot of 62. Oh, geez, that surprised me. The market closed and bell went off in my other ear. Sorry, a little jumpy. It doesn't come close to the 20 ticks that I really would like to see, and so had you got in on it, you wouldn't have lost anything. You would have made a little, but just not a great trade. And then we just continue on, right? We just continue bouncing back and forth and bouncing back and forth. I got excited here because the price pushes up, creates a new high. I mean, it breaks that high of day by 1 tick. So I thought, okay, here we go. But no, it bounces back down and down. And there was just nothing. This was the one entry that met the criteria. And I didn't take it because, one, the EMA was flat, and I don't like that flat EMA. Two, it had come in really choppy, and given the fact that every previous time price just has blown through that middle, I just didn't trust it. Now, the one thing to keep in mind is most of the time, let's see if that's true. Yeah. Most of the time, if your entry is trailing the candle, so for example here, okay, so we came down, we were up here, we created a new low, we come back up to our red line here, the 21 EMA, okay. So what you would do is this candle pierced it, and it actually pulls back. You're at this little dotted line here is the midline of the opening range. So this actually, at this moment in time, looks like this might be a good entry, right? This is the first touch of the red line after price crossed the moving averages, created this recent low. I mean, the last time we were this low was a long time ago. Okay. So this looks like it would be a good entry. So if your order for taking a reversal off of this was sitting 1 tick below the candle that pierced the EMA, which is right here, the next candle pushes up higher, and as soon as it opens and closes above that EMA, the trade is no longer valid. And so that's what helps to keep you out of the bad trades is you never get into them because it never comes back. Now that doesn't always happen. There are cases like, let's see, right here. If you'd have taken this one, thank you, Norton. If you'd taken this one and said, okay, price broke below, created this low, and it kind of chopped its way back up to our moving average. This is the candle that pierces it. If you had placed your sell order here just below this, the next candle comes down, it would have ticked you in. You move sideways, you're in a little bit of profit before it turned around. Okay, so this would have been a fake out. Maybe you'd have got out for break even, small loss. It probably wouldn't have been catastrophic, but that's a case where it did fail. Most of the time though, here's one where it comes up, you create a new high, we pierce the EMA, but if your entry order, your buy order is trailing these candles, you never get in because as soon as a candle opens and closes below the EMA, the trade is no longer valid. You cancel your order and you're out of trouble. Okay. So anyway, this was the one time where it would have worked today. The only time I think. I didn't take it because it was just choppy. I didn't trust the market. I just, I should have taken it just because that's a valid entry based on my trade plan. But at this point, I wasn't really trusting anything. And honestly, this chop down into it kind of had me spooked. So that was really not rational, but that's what I was thinking. So I didn't take it. You know, this one here comes below, but it never gets back up into the MAs. But, you know, we just break through it here. We sit sideways. You know, it does eventually push up. There's no real pullback and retest. I mean, the market just did not, you know, it just didn't give us anything today. So that's the recap on gold. Just nothing there. That is what it is. So let's look at the trade that I did take. Oh my goodness. Well, yes, sort of reversed in it. Okay. So I was watching ES, and I don't normally trade ES because it can kind of move wildly. But I do trade SPY, and so it's kind of an awkward paradox because on one hand I'm kind of comfortable with the price movement, but on the other hand it moves too much for me for comfort on the future side. So, but I was looking at this and I just needed a trade, and so I thought, all right, well, here we've come down, we've reversed off of the overnight open. We've come down back up into the gold line. I had this trend line. I was just bored and drawing trend lines all over the place. So I had this trend line kind of coming down. We had tested the 1 minute 9 EMA, and it was coming down off of this, kind of looked like a retest potentially off of this trend line. And so I thought, well, you know, it might go for a tick. And so I went ahead and got in. I didn't wait for the break of the candle. I just marketed in here, which, you know, it got me in on this the first little arrow on most of the 14 of the accounts. This one was on the leader account. And then I just put my buy order to close the position 1 tick below that entry. And I was nervous. It actually pushed up first all the way up here before it kind of came back down and got me out. So I got 1 tick. So that was my trade. Ironically enough, actually ES would have been a better played actually more nicely, because here we have a cross below the EMAs. We come back up, we test right here, and we do pull down. It's not, you know, wouldn't be the full 5 points basically, but it went from 46.04 to 46.02, so 2 points. We come back up, we test it again, and it drops even further. We come back up, we test, and it drops again. But I wasn't going to push my luck at all. I was mentally exhausted, honestly, from just staring at charts all day long with nothing to show for it. And I didn't want to put myself in a position where I was, you know, taking a trade just for the thrill of taking a trade and potentially losing. So there'll be better trades coming down the road, so we're going to wait for those. So until next time, trade safe, follow your plan, and hopefully you had a good day. If you didn't, shake it off. Come back tomorrow with renewed energy and see what the market has for you. That's all I got. Have a great day, everybody. We'll talk to you tomorrow.